All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about Iris Energy, stock ticker IREN. They are a Bitcoin mining company. They just issued their June operational update, so the year is half over, and I want to take a look at what has happened. Their plans have changed massively, so there's a bunch to go through. We're going to look at where they are right now. We're going to look at their production. We're going to look at how they may stand up versus a crypto winter or a bear market, and we're going to see what major changes they made to their plans. Then, of course, we'll look at the chart and we'll talk about some potential price predictions and see where we think these guys might be going. So we cover Bitcoin and the Bitcoin miners all the time on this channel. So if that's content that you're interested in, please remember to subscribe to the channel and hit the notification bell. Also, if everybody would please smash the like button, it helps the channel out a lot and I really appreciate it. Okay, let's talk about Iris Energy. All right, we're in the middle of the trading day today on July 14th. They're trading at about $3.19 right now. Their 52-week low, which is their all-time low, is $2.89. These guys just went public in November of 2021, so they only have about 8 months of trading history. However, they are mining Bitcoin and they have been for a while now, so they do have a little bit of history to compare to, so we're going to take a look at that. So market cap is $173 million. That is way down off of their highs. This company IPO'd at $28 in November. They got as high as $28.25 on that day, and then it's been all downhill from there, all the way down to $3. I did make a video on these guys back in January, and at that time they were trading at about $12. They're now all the way down to $3, so we'll dig into that more when we get to the chart. But you can see this company has pulled back massively, which is consistent with all of the Bitcoin mining companies. The Bitcoin mining industry as a whole is down about 90% as far as the publicly traded companies go on the NASDAQ from their highs back in, most of which were back in November of 2021, some of which were earlier back in January and February of 2021. Okay, Iris Energy Limited announces monthly investor update for June of 2022. So at the top they say operational guidance increased from 3.7 exahash to 4.3 exahash in 2022. Now we're going to look at that because that's very misleading. I'm going to show you where they started, what their original target was, which was drastically different than this, and then we'll go through the changes they've made to their plans. Then they say the Mackenzie development activities progressed ahead of schedule, so we'll get to that as well. Iris Energy, a leading sustainable Bitcoin miner, which is building an institutional grade infrastructure platform. 4.3 exahash expected to be operational by the end of Q4 2022. Today publishes a monthly investor update for June of 2022 containing its results from operations as well as construction and development updates. So I'm also going to talk about operations, and then I want to go through the change in their plans, and let's just see what they've done. Okay, so average operational hash rate, they were at 1.164 exahash, so that's fairly similar. They've been inching up month over month. They mined 148 Bitcoin in the month of June. So we'll compare that to May because we like to compare month over month on this channel. That is the most meaningful thing, I think, in a small cap, high growth industry like this. Okay, so if I go back to May of 2022, you'll see their operating hash rate was 1.165 exahash and they mined 151 Bitcoin. Now there's one more day in May than there is in June. So they mined 151 in May, 148 in June. So their per day amount actually went up just ever so slightly, but most of the Bitcoin mining companies in April and May and June have really pulled back, and we haven't seen a lot of growth and a lot of increase in Bitcoin mined. There are a few exceptions. I've done an individual breakdown of almost every single Bitcoin miner through June 30th, so if you're interested in a particular miner, please check out my page and you'll see an operational update for most of the Bitcoin miners. Okay, so nothing outside of the industry average. This was very similar to May, and June, like I said, for almost every company was very similar to May. Actually, some companies mined substantially less in June than they did in May. Okay, revenue per Bitcoin was $23,925. So obviously that is outside of their control. The revenue is going to be whatever Bitcoin is selling for. Electricity costs for Bitcoin, $8,875. So that's a key number. That's kind of their cash flow break even number, if you will. This is how much they have to pay in energy to mine a Bitcoin at the current difficulty level. And I will tell you, it looks like the difficulty level adjustment is going to go down again in a few weeks. It's been headed in a downward direction for the last couple of months, so we'll have to wait and see what happens. Okay, so before I go through the rest of June, I want to show you what they said in their May update, because this has been consistent. This is their growth plan, which I want to talk about. They have had a consistent growth plan since they went public in November of 2021, and they've stuck to that schedule ever since, and they did make a major change to it. I want to talk about what their growth plans were as of last month's operational update, and then see the changes that they have made based on the changing environment of Bitcoin. Most notably, it's run in June from about 30,000 down to 20,000, and at some points under 20,000. So all these Bitcoin miners are scrambling to some extent to modify their plans based on the massive reduction in the current price of Bitcoin and the potential for some type of extended Bitcoin bear market. So again, whether that happens or not, I don't know. This is not financial advice. I don't think that we're going into an extended bear market in Bitcoin, but again, this is not financial advice. You guys got to do your own due diligence and come up with your own conclusion on that. Okay, so this is their miner shipping schedule. This was as of May 31st. So this is the update they put out at the beginning of June. So this was their plan just 1 month ago. You'll see that this plan includes through the end of Q3 2023, the delivery of 154,000 machines, getting them up to 15.15, or what they refer to as 15.2 exahash, has been their goal since they went public. 15.2 exahash in Q3 of 2023. You'll see this is heavily backloaded. Q4 of 2022 is about 28,000 machines, and then Q1, 2, and 3 are about 26,000 machines each. So, 125 or 130,000 of these machines were backloaded in this delivery schedule. However, they have paid for a lot of these machines and given deposits on all the rest of them. So we will go through that. So just remember, as we go to the updated one, the last month they showed us an estimate of 154,000 machines and about 15.2 exahash up and running by Q3 2023. Okay, let's check out this month. Okay, so now it is 1 month later. Here is their new plan. And they did do a press release in the middle talking about this. They didn't just throw this miscellaneously at the bottom of their June update. They did a press release and talked about the fact that they were changing their plans based on the changing environment of Bitcoin. And we'll go through that in a little bit, just in a minute. But I want to show you what the end result of this is. So now, where there was 154,000 machines, and again, that was through Q3 of 2023. Right now, they're only willing to talk about through Q4 of 2022. They are now talking about 46,000 machines and an exahash rate of 4.3. Remember, this was 15.2. They've not canceled all the rest of the machines that they've already purchase ordered and put deposits on. However, they have put them on hold. Most of that infrastructure needed to be built between now and then. I'm going to show you some slides from their most recent investor package, and that will help explain this a little bit. And basically what they're saying is, listen, with this basically a reduction of 11 exahash, they're putting that on hold and they're going to wait and see how things play out. But you can see this is a drastic pullback, and to me, this is more of a recognition of reality. We went from 2 companies traded publicly on the NASDAQ to 20. Now, 3 or 4 of those were established companies that were trading in Canada that listed themselves on the NASDAQ as well, but a lot of those were brand new companies, some of which still have not mined a single Bitcoin, all of which came out with very grandiose plans, right? Everybody under the sun was going to be at 15 or 20 exahash in the next year and a half or 2 years. So I think this is a good reality check. I think this shows that management is focused on not burning through their liquidity so that they can get to the other end of whatever we are in the middle of. So let me get to their investor package and I'll show you a little bit what I'm talking about. Okay, so again, this is their investor package from just last month. So you'll see in Q1 of 2022, they were at 0.8 exahash. In Q2 of 2022, they were at 1.1 exahash. They were expecting to get to 3.7 in Q3 and then up to 10 in early 2023 and then up to 15 later in the year in 2023. And remember, that was Q3 of 2023. They were going to be at 15 exahash. So this 10 and this 15 are off the table. This 3.7 now by December 31st, they hope to have at 4.3, and that's as far as they're willing to commit. So they have the infrastructure in progress that's being built out to run the 4.3 exahash of machines that they have ordered and that will be delivered. So to me, this is a realistic plan. I'll be looking at them on a monthly basis, but what I will be looking to see is, do they execute this plan as they have now laid it out? Because all the machines are ordered, all the machines are scheduled for delivery, and all of the operations are under construction and nearing completion. So they should be able to hit this 4.3 exahash by the end of the year. So if they do that, despite the fact that they have drastically changed their plans from 15 exahash down to 4.3 exahash, 4.3 would still represent a massive increase, and if it represents reality and it's a doable plan, then obviously that's the most important thing. You don't want to run out of liquidity and go out of business on the way to your big plans that obviously at that point you'll never get to. So let's just take a look at their balance sheet for a minute and see how they are prepared to do this. This is their balance sheet from the period ended March 31st, 2022. So what I want to look at is total current assets. You'll see they have $201 million of current assets on this balance sheet, 157 million of which is cash. Iris Energy has been selling their Bitcoin as they mine it. There are several companies now doing that. That has been their position all along. So you'll see they don't have a gigantic cryptocurrency balance on their balance sheet. So that has worked out well for them. Effectively, they've been able to average themselves out of their cryptocurrency at a much higher price than those companies that held and were forced to sell in June, all of them at $20,000. So I think this plan has worked out fairly well for them. It leaves them with $157 million in cash. They have $355 million in non-current assets, 178 million of which are deposits. So these are deposits on all the machines to get them to 4.3 exahash and also all the machines to get them to 15.2 exahash. So what's happening is there is money out there, but they are going to defer that in an effort to maintain this extremely healthy cash balance. So you'll see from a liabilities standpoint, their total current liabilities are $54 million. Their total liabilities are $98 million. So they have more cash than they do total liabilities. So what they have done is put a plan together to utilize the cash they have and make sure they don't run out of liquidity. So I'm going to go back to the operational update and show you what that plan is. So here's basically a list of bullet points. Financial and business update. As of May 31st, 2022, the company had approximately, and this is preliminary unaudited, so $454 million in total equity. They say they have nil corporate level debt, meaning zero. However, you'll see there's a note 5 here. Note 5 basically says through a subsidiary, they do have about $100 million of corporate debt, which we did see on their March 31st balance sheet when we took a look at that. They then say 93 million of cash, and they say that's after the expected remaining capital expenditures to achieve the initial 4.3 exahash. So they have actually about $125 million right now on the balance sheet if we looked at note 6, and some of that they're going to have to spend to get the rest of their equipment and finish their construction, but that will leave them with $93 million of liquidity and all of their facilities and machines up and operational at 4.3 exahash. So if they can execute that plan, they should be mining somewhere in the neighborhood of 400 Bitcoin per month by the end of the year this year, which would be a significant increase from the about 150 that they're averaging per month. And that would put them very competitive with a lot of the other more established Bitcoin mining companies. Now is the time to be circumspect, monitor the market closely, and then continue our growth trajectory. This really sums up the heart of exactly what Iris is doing. So if we look at these bullet points right here and this commentary right here, essentially they have scaled things back for the moment. This is still a 400% increase in their exahash over the course of the year 2022 if they can execute this plan. And it looks like everything is in place to do so. What they've basically said is, we're not going to talk about 15.2 exahash right now based on the changing environment. You know, now is the time to be a little bit more cautious, and we'll see how that goes going forward. So I like what they're doing here. We'll take a quick look at the charts. You're going to see that from their IPO, they're down about 88.75%. So this is exactly consistent with the rest of all of the Bitcoin miners. If we zoom in a little bit, this is about the last 4 months worth of activity. So this is back on March 10th. They were still trading at about $18 at that point. So you can see they've pulled back 82% since then. So my main takeaway from this is I think they have a new plan. It's drastically reduced plan. However, it seems to be a very realistic plan. It is mostly paid for. It leaves them with a lot of liquidity left after that to ensure that they get through whatever is coming at them. So my personal opinion is that Iris Energy is very well set to get through whatever bear market or potential crypto winter we are in the middle of. So again, this is not financial advice. Obviously, these guys are down, almost 90% off of their highs from their IPO in November. So like all the other Bitcoin miners, this remains a very volatile industry and a very volatile stock. So please do your own due diligence and invest carefully. These stocks have already gone down 90%. They could always go down more. So those are my thoughts on Iris Energy through the midpoint on the year. If you made it this far, please remember to subscribe to the channel, and we will see you in the next video.